Hi everyone, thanks for joining. I'm Simon. I'm a money mentor here at Women's Wealth, and today I'm joined by my colleague Victoria.
Hi, yeah, so I'm Victoria. I'm also a money mentor at Women's Wealth. And so today's topic is financial tips for freelancers, what you need to know. So I've been self-employed for nearly a decade now. So it's a subject close to my heart, and I'm familiar with all the benefits, but also all the challenges as well.
Yeah, I've also been self-employed for a long time now. Um, I guess one of the main challenges that I think is that you have to do a lot more for yourself. If you're employed, then things are done for you. So you don't have to go around setting up a limited company. You probably don't have to think about tax as much. And things like pensions are often most of the work is done for you by someone else. So yeah, but we also want to talk about the advantage of being self-employed, don't we, Victoria? What are your favorite things about?
Yeah, I mean, I've got three children, and so the flexibility of being self-employed is really key for me. So I've been to two sports days this week,
Nice.
and as a result, I've kind of done some work later into the evenings. But yeah, just be able to work in a flexible way is really important to me.
Yeah, I also find that. So the way I see it is, so if you can move things when you can move things. So if the weather's amazing outside, you can get outside in the daytime, and yeah, then shift your work around what you want to do and have that flexibility, like you mentioned. What about the
Exactly.
challenges, though?
The challenges, I think. Yeah, I mean, we'll come on to talk about this, but the kind of feast or famine, both in terms of kind of workload, but also then financially, is quite hard to manage to kind of control and manage.
Yeah, I
Yeah,
know
how
you're going to
about
talk
you?
about the ups and downs of variable income
Yeah.
shortly as well. So that's a big one. And yeah, like I said before, just having to do things yourself. So one of the things that stuck out to me was like you have to do something like if you have a limited company, you have to do an annual return for Companies House and you have to give them £40 just for the pleasure of filling in that form. So lots of extra admin that can come your way if you are self-employed.
Yeah, exactly. Well, yeah, let me talk about variable income. Because I've spent a long time thinking about it and how to wrestle back control. Um, so anyone who's self-employed is going to be familiar with variable income. So one minute you're swamped with work, the next your inbox is emptying and you're twiddling your thumbs, and that can be quite an emotional roller coaster. And then the knock-on effect is that it's kind of feast or famine financially as well. So just like how can you be in control when you have a variable income? So that's what we're going to talk about now. And um, this isn't a step because I'm hoping that anyone who's self-employed is doing this already. But it's really important to have business and personal accounts and to keep them separate. And sometimes you can think, oh, well, it's all my money, it doesn't really matter. But it really will make your life and that of your accountants, if you're lucky enough to have one, much easier if you keep them separate and you keep them clean. So we're going to kind of be focusing on personal finances and how to control those. Um, and the very first step is to kind of almost without judgment to just understand where your money's going and what you're spending your money on. Um, some of those will be easy to keep track of because you'll see them leaving your bank account each month with direct debits. And others may catch you by surprise because they're one-offs or they're kind of ad hoc. So kind of birthday presents, the car breaking down, even just kind of those regular trips to the optician, but which aren't kind of a direct debit. So first things first, just start collating that information and putting it all together. Um, so yeah, start with the information you know, and then kind of add in more as it kind of comes in. And slowly that picture will get clearer and clearer and more accurate. So once you know where your money's going, we recommend that you separate it into essential spending and non-essential spending. So essential spending is your needs. So your housing, your food, your bills. And then your non-essential spending is your wants. So gifts, going out, takeaways, holidays. And don't panic. We don't want you living like a martyr, but we do want to make sure that your essentials are covered first. And so once you know what that number is, what your essential spending is, that is the minimum that you need to transfer from your business account into your personal account each month. So what happens if you have a bad month or you fall ill? How are you going to cover your essential spending? Well, that is where your emergency fund comes in. And as financial advisors, we recommend everyone has an emergency fund, whether you're employed or self-employed. But if you are self-employed, that is going to be that little bit more important for you. It means that you can cover your bills every month, even if something unexpected happens. So an emergency fund should have a minimum of 3 months essential expenses in it. You might want to make that 3 to 6 months or even up to 12 months, just so that you can feel really safe and secure and make sure that you don't have to worry about the kind of unexpected income of kind of being self-employed. But what happens if the opposite happens and you've done loads of work and then all your invoices get paid all at the same time and suddenly you've got this big surplus? First of all, congratulations. That's brilliant. I'm really happy that your hard work is paying off. But sometimes it can feel hard to spend money when we're self-employed because we don't know what next month's going to look like or the month after that. And we can worry that the good times aren't going to last. But at Women's Wealth, we really believe in spending money as well as saving money. And so if you're self-employed, a proportional budget might help you to spend your money. So there are various models of this, and you might have seen them on Instagram or even TikTok. And the most common one is 50, 30, 20. And what that means is you spend 50% of your income on essentials, which we've talked about already. You spend 30% of that on guilt-free spending, on the things that you love, and you put 20% into savings. At Women's Wealth, we see a distinction between saving, which is for the short term, and investing, which is for the long term. And that might include a pension, which Simon's going to talk about in a bit. So we might kind of tweak that to 50% essentials, 30% spending, and then 10% saving, 10% investing. But the great thing about this proportional system is that you can adjust it to you and your circumstances. So while you're building your emergency fund, you might want to save a higher percentage and maybe spend less. If you've got a 12-month emergency fund, you might want to invest more or you might want to spend more. It's up to you. But this method means that your essentials are met, you are saving and investing for the future, and you can have the freedom to enjoy the money that you're making today. So what might this all look like if we put it all together? So this is a kind of example cash flow. So thing number one, your invoice gets paid into your business account. And from your business account, you take out your tax and your national insurance and you put that into a business savings account. So you've got that money for when your tax return is due. At the end of the month, you transfer your essential spending into your personal account. And then anything you have left, you divide proportionally in your predetermined proportions into saving, investing, and spending. And so, yeah, I hope this shows that you can be in control of your finances, even when you've got a variable income. And if you'd like any help kind of figuring out your essential and non-essential spending, how big your emergency fund should be, how much tax you're likely to need to save for, then those are all things that we do at Women's Wealth, and we love working with the self-employed and helping them kind of, gain control over their finances.
Thanks, Victoria. I think I'm really interested in the idea of guilt-free spending. So I think that's so tracking your expenses maybe doesn't fill people with excitement. Thinking about proportions of spending is a really interesting idea, but if the result of that is guilt-free spending, then that's quite powerful, isn't it?
Exactly. And there's always a balance to be struck, isn't there, between kind of saving for the future, but also living for the now. Like money is a tool that we use to live our lives. And I think it's important, and I know you do, that yeah, life is for living. So yeah, that's a really important part of a budget in my mind anyway.
Yeah, I was thinking as you're talking that we talk a lot about emergency funds, obviously protecting against things going wrong, but we can also think of having like an adventure fund for things
Yeah,
that we're planning, or a specifically named pot that was for a certain experience that we want to have um, at some point. So, like you said, balancing now and the future.
absolutely. Yeah. What have you got an adventure fund at the moment, Simon? Are you saving for anything in
Not
particular?
right now, but one of the things I was going to say as well about tracking your expenses over 12 months is you when you track your expenses, you start to learn about the things where you spent money where you think, oh, that was a great experience. And those things aren't necessarily always the most expensive things. So um, going to like a deli and getting a sandwich with your family and then having sitting out and eating that can be a really great experience. And yeah, you don't need to have a savings pot to be able to do that. It's just something that you can do. So yeah, that can turn the task of tracking your expenses into something more interesting and help you to move down the road to becoming more aware of what brings you joy and as well as aware of how you spend your money.
Yeah, and the things that kind of, those takeaways when you're tired on a Friday night, if you turn that into a ritual that the kind of whole family enjoys together, then that could be really meaningful to you. But it might just be that you're kind of just spending money because you're tired, which, there is a convenience factor there, but maybe that isn't important to you. And maybe if you took that away, then you could, yeah, like you say, spend more money on the things that you want to spend money on and that, yeah, that matter to you. And that's going to look different for everybody, isn't it?
Yeah, and you can go out and swap a little bit of this for a little bit more of that, that
Yeah.
kind of thinking. I was also interested to know, you mentioned investing. So how come we don't just talk about saving? How can we add investing into that as well?
Yeah, absolutely. So, um, cash in your bank account is a wonderful thing because you can spend it on the things that you love, as we've just been talking about. But the problem with cash is that over time, as inflation goes up, the value of that cash goes down. And so at Women's Wealth, we kind of have a bit of a rule that if you have any cash that you're not going to spend in the next 5 years, then kind of to preserve the value of that, we would recommend that you invest that instead, because that will grow kind of hopefully over and above inflation. So it's kind of number one to kind of ensure that the assets that you have kind of maintain their value, but it's also kind of looking to the future as well. As we're talking about, there is a balance to be struck, and having fun in the now is important, but being able to kind of have freedom, flexibility, fun in the future is also really important too. And so investing, that's what investing is basically, is ensuring that you're kind of preserving the value of the assets that you have, but also that you're providing for yourself into the future as well. And pensions are a key part of that, aren't they, Simon?
Yeah, that leads us on nicely to talk about pensions. So a statistic that you shared with me was that only 16% of self-employed people are currently paying into a pension. So obviously that means that a really high number of self-employed people aren't making any provision for their future. Um, so it's not something that we're saying to make anyone feel bad about, but it's definitely something that you need to take action on. So as you were saying, Victoria, it's about providing for your future self. And it's also about, so you can't rely on the state pension, for example. That's unlikely on its own to give you a comfortable retirement. And also, there's an aspect to it. So if you're self-employed, you are your own employer, obviously. And so you can compare yourself to your friends and family who are employed and think about what they're getting in relation to their pension. So if you have a job and if you're earning over a fairly low minimum amount, then your employer is contributing to your pension and you are contributing to your pension. And those contributions as a minimum come to 8% of what you're earning. So if as a self-employed person, you're not contributing at least 8% of what you earn to a pension, every year that you're doing that for, you're falling behind your peers in terms of providing for your future. And yeah, as we were saying, we want to have those options. We might think now that we're going to work until we're 70 or 75, but it's nice to have those options as well. And so one of the ways we get those options is by building a pension fund and pension assets. So yeah, also talking about pensions, or standard of living in retirement compared to the state pension. The state pension is around £12,000 a year, and some research recently said that for a moderate retirement, the cost for that is about £32,000 a year, and for a comfortable retirement, around £44,000 a year. So I'm not saying those numbers in order to make it sound like it's quite hard sometimes to know how you get from here to there, but the main ways you get from here to there is by taking action. By taking advantage of tax efficiency will help you get there more quickly, which I'll come on to in a second, but it's one of the real advantages of pensions. And thirdly, the compounding effect of investment over time. So Victoria, you mentioned about how the returns on investment. So you can't promise returns on investment. There's always warnings on every advert for investment products that you ever see in the newspapers. But basically, we also know that over a 20-year period, you are very highly likely to come out significantly ahead. And also contained investment is a mechanism to protect your savings against inflation. And that's why we advocate investing here at Women's Wealth. So yeah, why use pensions from a tax point of view? So when you use a pension, your money is locked away and you can't access it. You can't access it for some time usually. And the benefit you get in exchange for that is that you get tax relief on your contributions. So if you contribute £80 into a pension, the government will top it up so that you've got £100 to invest. And if you're paying higher or additional rate tax, then they're even more advantageous. So obviously, if you're getting those kind of benefits, that, as I said before, those will help you to reach the point you want to reach more quickly, reach financial security more quickly. If you're self-employed through a company, your company can contribute to your pensions, and then you won't have to pay the corporation tax on those contributions. And yeah, so really pensions are a way to help you to get to that point of having options, of having financial security more quickly. In the blog post that we'll share in the chat that goes with this, there's some information on how to get started with a pension. As a general guide, the focus should be on getting a low cost option that's diversified, and the investments you choose in that should take into account how long you've got until retirement. And if all of that doesn't make sense to you, or is something you'd like help with, then obviously that's what we help our clients with here at Women's Wealth. So we're here to help our clients save time and to make sure that you don't make any mistakes, because your pension asset is likely to be your biggest asset, so worth even more than your house. And so it's an area where small mistakes can add up to bigger mistakes, which will then cost you that freedom down the road. So yeah, if you'd like us to help you, then we'll also put a link in how you can book a discovery call with us to learn more about how we can help you. And yeah, just as a general point on that, I'm yet to work with any clients where we couldn't help them in some way with their pensions, whether that was adjusting the pensions that they already have, or thinking about how to make tax efficient contributions to pensions now and in the future. Those are really the things that will make a big difference over time.
Absolutely. And yeah, I think it's one of those things that it's easy to kind of put off doing because it feels scary, or it feels too big, or it feels too confusing, or all those things. But actually, it is one of things there is kind of a cost to kind of pushing at down the line, because the sooner that you do start investing, particularly in your pension, the bigger difference it will make. And I remember when I first went self-employed, kind of in my early 30s, I was really excited about the freedom and flexibility. And I probably looked at my employed friends and thought that was a bit of a boring lifestyle. And now I'm in my 40s, and now I really kind of appreciate all the benefits that they've kind of been enjoying all this time. And I know, I'm very aware that, yeah, I need to kind of make sure that I'm making those pension contributions. Otherwise, I will miss out on all that freedom and fun in the future.
Yeah, definitely. And we were talking about teachers' pensions, weren't we? That
Yeah,
if you've got friends who are teachers, there's a point when you hear about the stresses of being a teacher, but then there's a point when you realize they've got defined benefit pensions that are really quite will give them lots of options as they get to their 60s. And yeah, as we've said a few times, it's nice to have those options.
absolutely. Has anyone got any questions that they want to ask? If you do, you can either come off camera and ask, or you could pop them in the chat. It's up to you.
I was going to add to something you said before, Victoria, that it's something where getting started is the key.
Yeah,
So if you take that, so you're talking about, you were talking about the percentages with variable income as well. So you can use that as a starting point. You can start taking those steps, and then you can iterate and keep checking in every year, how say, or every 6 months, how's that going? How's that looking? If your earnings have gone up, then you can adjust those percentages. You don't necessarily want to assume that you have to spend a certain percentage if you would rather save it or invest it. And yeah, taking action and then reviewing those actions on a regular basis is how you make serious progress.
absolutely. And at Women's Wealth, we have a very cool tool called the cash flow modeler. And so we can kind of use that technology to kind of project into the future, kind of if you are making this amount of pension contributions, what will that look like kind of at retirement? If we increase that, what does that look like? If we reduce that, what does that look like? And so we can really help you kind of, because I think also kind of, yeah, thinking, oh, I need 35 grand a year, but how do I get that? How do I achieve that? And that is something that, yeah, we can really help you and show you in at Women's Wealth.
There's a question there about the biggest area I struggle is the balance in taking money from the business or reinvesting it back into the business. That's an interesting one, isn't it?
Yeah, that is a really tricky one. And I think
So
that
I got
you
on.
go, Simon. Oh, I mean, I think that's where kind of like knowing that your essential expenses are covered gives you that peace of mind. Knowing that you're saving and investing gives you that peace of mind. And then that is really kind of like an individual choice, isn't it? And I think, oh, bye, Claire.
Off to make money to pay into a pension.
Yeah,
Yes.
exactly. um, so yeah, that is your choice. But I think it's kind of being intentional about it. And that's where the proportional thing can really help, because rather than kind of chucking money here, chucking money there, it's like, right, I'm choosing to spend this. I'm going to assess how that works. Is that enough? Is that not enough? If it's not, okay, where can I take that from? But it's all about you being in control as opposed to your money controlling you and being kind of reactive. It's about
Mhm.
being proactive rather than reactive.
Yeah, I think, and the thing that I would add to that is that it's about, like you said, that once you know enough about your personal finances and your business finances, then that data and that information gives you the information you need to make the most informed decisions. So, for example, when choosing whether to invest back in the business, if you have an idea of how much you can make by investing that money back into your business, then
Mm.
you can sensibly make a judgment about whether contributing to your pension or reinvesting into the business in order to increase the value of your business by more than the pension benefits would give you, then that's really useful. But unless you know the numbers to start with, you're just you're just you're not guessing, but you're using intuition. Whereas you can start with the numbers and then you can go with your preferences based on the numbers after that. And obviously that's what financial planning helps people with in general, is making informed decisions based on all the numbers and all the information.
Absolutely. Yeah. Knowledge is power.
Definitely, yeah. Okay,
Great.
so don't think that I don't have anything else to add really. Do you, Victoria?
No, I think, yeah, we're kind of time's ticking on. So, yeah, it's been, thanks so much for joining us today. I hope it's been helpful.